Hello everyone, welcome back. Last time we talked about when should you do value engineering, yes or no. Okay, this is the second part of our chapter 13 for accounting 312. So last time we talked about pricing decision, and then we said two approaches, market-based and then cost-based. We said for market-based, the market already set a price for you. You cannot decide the price. All you can do is to find out your cost to see whether you need to do value engineering, yes or no. Our target cost is only 720, but our current cost is 900. So you can see our current cost is way higher than the target. So we have to do value engineering. So what's the meaning of value engineering? It's just a concept, and I think it's important. So let's look at those slides together. Value engineering is a systematic evaluation of all assets on the value chain with the objective of reducing cost and achieving a quality level that still satisfies customers. So you can imagine it's just you redo all the parts along the value chain from the R&D to customer service. So we try to reduce the cost for all of the parts. And then we still want to keep the good quality. We cannot say, hey, you just low quality. That's not right. Lower cost, but still keep the same quality. Value engineering entails improvement in product design, kind of like all the value chain, right? It's not just one part, it's everybody working together, and then all the parts has to work together. To implement the value engineering, managers must distinguish two things. I want to explain this to you, and then you won't maybe test it, value added cost and non-value added cost. So you will say, what is value added? What is non-value added? Very easy from the name, you can say the cost activity that add value to your products will be value added. The activity or the cost that doesn't add value will be your non-value added. We look at some example, you will feel better. Value added cost, look at this together, right? We will read together, is the cost that if eliminate would reduce the actual or perceived value or utility. So because it adds value, right? It adds value. So if you eliminate them, it will hurt your value. From no matter it's from your quality or from your customer experience. On the other side, non-value added, if we eliminate, you will not hurt the value. So this is the cost the customers are unwilling to pay for. So when we do value engineering, which type should we eliminate? Which type of cost we should try to figure out and decrease that cost? We should decrease the non-value added, right? We should decrease the non-value added cost, but we still keep this value added cost. Because if you eliminate that, yeah, cost is decreased, but that will hurt your value. But for non-value added, if you eliminate it, it will not hurt your product because it doesn't add value. Yeah, I still don't really know. I need some example. Okay, let me give you an example. So I'm using a phone, right? So I'm using a phone. So you will say, okay, the phone, I feel the cost is so expensive. Like it should be 720, but now it's 900. So I'm so smart. I'm trying to decrease some activity or cost. Okay, look at my phone. Let's say maybe there are two cameras, right? I just pretend, hey, there is one camera, there are two cameras. Each one, the cost is $50, maybe $100, 50, just to say $50, $50. I say, how about I just cut down these two cameras, then I can save $100. So I'm very close to my target cost. I decrease my cost from 900 to 800. Can you do that, yes or no? You cannot do that. Because those cameras, they are value-added parts. Yeah, they cost money, but they add value. So if you say you don't have a camera, I'm not sure I will still buy the phone honestly. I bought this phone just to have the camera. So the cost for those cameras is value-added. You cannot eliminate those activities. So you will say, okay, kind of got the value added cost. But what's the non-value added cost? If it's non-value added, why we still have those costs? That's a good question. Think about, okay, the phone, let's just make up an example, okay? So the phone I'm going to sell to my customer and he already booked it, but because I'm so lazy, I waited and waited and waited until last day. Usually the regular shipping is just $10 to ship to my customer place. Because I waited until last minute, I have to use the rush shipping and it will cost me $100. So the extra $90 will be non-value added. Customers are unwilling to pay for the extra $90. Hey, customers, it's not my business. You waited until last minute. That extra $90, the rush shipping cost is a non-value added. So you should eliminate. It's your fault. It's your fault. So some examples similarly, like you redo your work because you didn't do it properly. You were watching TV, you messed it up. You have to redo it. The customer said that's not my fault, right? You have to take care of it. So that is non-value added. Another example like what? A breakdown of your machine. You didn't maintain your machine properly. So when you do this phone, the machine broke down, so you have to redo, it takes longer time, maybe you have to buy a new machine or whatever. Non-value added. Customers, they are not willing to pay for those costs because it's your fault. So you should try to eliminate this type of the cost. Does this make sense? I hope this makes sense. Okay, so next part, we are almost done with the PowerPoint. So next part, we said another type of the terminology you also want to know is cost incurrence and then locked in cost. Cost incurrence and locked in cost. You say, what's that? Cost incurrence is when a resource is consumed to make a specific objective. So it's when you really incur the cost, when you really use raw material, when you really pay employee to work for you, that is cost incurrence. You will have a lot of cost incurrence in the manufacturing part. What's the meaning of locked in cost? It's also called design in cost. Okay, they are the costs that have not yet been incurred but will be incurred in the future based on decisions that have already been made. Oh my goodness, this is a long sentence and I know each word, I just don't know what's the meaning of this sentence. I need your help. What's the meaning of costs that have not yet been incurred but will be incurred in the future? Think about what's that. What's the meaning of locked in cost? We still use the phone, right? Okay, so many examples we can think. Okay, so let's say before I'm making the phone, I have to think about what color the phone it is. So finally, I decided to use black. So at that moment, when I designed my phone, I didn't pay by material. I didn't pay anything. So there is no cost incurred. But I made the decision I will use the black plastic, right, to make my phone. So if later the material price increased, okay, for whatever reason, the black plastic price increased, doubled, tripled, but can you go back to change your design? You cannot. The material, the black plastic, the material is already locked in. When you designed to have this phone, you already did all the design, you already did the marketing. So at that moment, you didn't buy for this material, but the material is already locked in. No matter later what will happen in the future, hard to change, you cannot say, oh my goodness, material goes up, I wish I can go back. You cannot go back. The price, the material is already locked in. Does this make sense? Similarly, like, right, I got this phone, I haven't decided I use T-Mobile or Verizon or whatever. So when you sign the contract, you paid later, but when you sign the contract, you already logged in yourself in this plan for many years. So this is called locked in cost. They haven't incurred, but they will incur in the future because I decided to use the black plastic as my material. So you can see the best opportunity to manage your cost is before they are locked in. Once it's locked in, hard to change. Once it's locked in, hard to change. Next slide, I apologize, it's not, I don't know why it has this thing, but I just use my note here. So look at this table, I hope it makes a lot of sense to you. So you have all these value chain, right? You have R&D, you have manufacturing, you have marketing, distribution, and other activities. So for the R&D, you have a lot of costs. So this is the cost, this is the cost. A lot of cost in R&D is locked in cost, So we lock a lot of cost during the R&D activity. But we have a lot of the cost incurrence. We have a lot of cost incurrence in the manufacturing activity, where we really use material and then use labor to work for us. So you have a big part of cost incurrence in manufacturing when you really incur the cost. But you have a lot of cost that happened in the R&D at the locked in cost. We said the best time you can manage your product is before it's locked in. So when you do R&D, yeah, you don't really need to pay too much as raw material, as labor, but you have to be really careful. Those costs, they haven't been incurred, but it's already locked in there. You will pay for the price later. Okay, so last one, we talk about value engineering and then cost incurrence locked in. So I'm not really going to read it, just some wording there. Value, how do we really perform value engineering? So I think I'll stop here. For the first part, we say this is basically the market-based approach. I want to mention one more time, okay? I want to mention one more time. Why we have a cost-based approach? Because we cannot decide the price. The market already decided for you. Why? Because it's really competitive. So the general idea, very, very important logic for this method is you don't really know your cost. You derive it from the difference of your revenue and then your operating income. So you always derive this target cost. If I say your revenue is $100, your operating income is 20, so you have to control your cost at $80. That's the highest price you can afford. So in this method, the only thing we can decide is the cost. Then we compare our current cost with our target cost to decide whether we do the cost, the value engineering, yes or no. If we want to do value engineering, we have to make sure we know what is value added, what is non-value added. We should eliminate all the non-value added. We also need to know what is cost incurrence and then the locked in cost. Don't wait until cost incurrence. Make sure you do everything properly before they are locked in. Okay, so I think I may let you work on some calculation and also the concept using the multiple choice at the end of this handout. I will email you if what I need and when it's due. So make sure you check your email. Thank you. Chapter 13 is really not like really hard to understand. I will say read textbook a little bit, get some better understanding on these concepts if you have any question. And then always email me whenever you need any help. Thank you.